Hello and welcome to this edition of the Sales Genius Network webinar series. My name is Doug Davidoff. I'm the founder and CEO at Imagine Business Development, and I just want to take a moment before we get started and thank everybody in attendance. Thank everybody who's taking some time to watch here. We certainly know how crazy things are, how busy everybody is, and so we are very grateful anytime that people are willing to share that valuable time with us. And I'm very confident that you'll find this time well spent. Today, we're going to dig into what is probably the hottest trend around sales and marketing organizations, especially for those seeking high growth. Some research shows that the RevOps function is growing at higher than a 50% per year rate, meaning that the number of companies implementing a formal revenue operations approach, revenue operations team, if you will, is growing at a 50% plus rate. There's more and more conversation about it. It's absolutely something that people should be paying attention to. And we're going to talk about how to launch it if you haven't already, and how to integrate it and get the most out of it if you have. To get started, let's go to, I think it's an important question that oftentimes gets overlooked, especially when something like RevOps is so hot and kind of everybody's doing it. And that question is, why RevOps? Why do we need RevOps to begin with? Why do we need a function? Is it that we just don't have enough buzzwords? By the way, that's a distinct possibility. When you dig into comparative research, you will find that there is a very compelling reason for revenue operations. Research done by Serious Decisions shows that companies that are doing the things that we're going to be talking about today see 19% higher growth rates, 15% more profitability. Profitwell is showing that customer acquisition costs are growing dramatically on a year-over-year basis. And Forrester, for several years, has shown that despite all the work, energy, and effort put into generating leads and developing marketing qualified leads, 98% of them never result in a sale. This is one of my favorites on the areas around technology. CEB did this a few years ago. They found the average company is spending $5,000 per year per rep more on sales technology, and the net result is lower conversion rates. But all you have to do is look at NPS scores around CRM, marketing automation, go on Twitter or LinkedIn, hear people talking about the difficulties that they're having with their tech stack. And, there's no question that business is getting more complicated, and businesses are investing more and more in enablement and acceleration. But, the question really holds out, are those investments justified? Are those investments paying off? Are we getting faster growth? Is growth becoming more effortless? Are we getting more juice for the squeeze? And one of the things that we've learned is when we think about growth, when we think about innovation, when we think about how companies think about change management, how they implement organizational improvement initiatives, performance improvement initiatives, they tend to think in line with what is typically called the S-curve, right? We got a kind of a slower ramping up phase as things get order, and then we kind of take off, life gets easy until we finish that cycle, and the next one has to start. The reality is actually quite different. Very, very rarely are you going to see, to the outsider it might look like this, but to the insider it's actually very different. McKinsey, Jeff Moore have done a lot of research in this area. We've seen it firsthand. If you do comparisons between typical companies and those companies that are able to sustain superior performance in their categories for a sustained period of years, you're going to see that they have, they view it through a very different lens. The lens, the approach, the time frame is viewed through three distinct horizons. Creatively, we call those Horizon 1, Horizon 2, and Horizon 3. Horizon 1, that's the short term. That's the next 12 months, this year, this coming year. Horizon 2, 1 to 3 years. Horizon 2, 1 to 3 years. Horizon 3, 3 to 5 years, right? That's long-term today, 3 to 5 years, right? Horizon 1's all about performance and positioning for performance. Horizon 1 is about revenue. Horizon 1 is about objectives. Horizon 1 is about getting shit done. Horizon 3 is about strategy. It's about vision. It's about testing. What's interesting is the companies that sustain performance, they have a very strong Horizon 2. We dub that the transformation zone. They're working today to solve the problems that they're going to have 12, 18, 24 months from now. Right? They're staging things. They're positioning themselves so that there's a lift. There's a we kind of create a bubble, if you will, around the short term so that short term has space to grow. Where the transformation zone builds the track so that the structure is clearly laid out. Behavior is managed effectively. Right? So if you think about these 3 horizons, what we did is we took them, and we're big fans of 2x2 matrices. Right? So we've got sustaining innovation. Sustaining innovation is about short term. That's about incremental improvement. And then we've got the disruptive innovation. That's where change occurs, right? That's where we manage change. Zone 1 is about sustaining. It's about delivering results. Zone 2 and 3, that's where the change management gets done. Here's something really interesting you're going to find in high-performing organizations, again, that sustain that high performance. They have a very distinct Zone 1A, the performance zone. That is typically a 3 to 6 month period of time. And it is all about hitting the number, meeting the objectives. It is the get shit done quadrant. And one of the things that you'll see is these companies do not let things interfere with the performance zone. Right? They're not implementing lots of change. And frankly, they're very often not even bringing incremental change in that short-term window. Right? Because they know that if we mess with the performance zone, we mess with performance. As a friend of mine liked to say when I went golfing with him, he says, when you're on the course, you get the ball in the hole in as few shots as possible. You hack your way, you do what needs to be done to get it done. You never work on your swing when you're on the course. You work on your swing when you're on the range. So if you think about it, the range, that's the enablement zone. That's where we're optimizing, systemizing, and programming what needs to be done so that those people responsible for hitting the objectives, for performing, have the freedom and the clarity and the space to get the job done. Zone 2 is where the change initiatives and enhanced capabilities get staged. So that's where things get built out. They move into Zone 1B, the enablement zone, so that they're staged and prepared, so that the performers are changing without having to manage a whole lot of change, if you will. What we see in the vast majority of small and mid-market companies is they absolutely have a Zone 1 focus, a Zone 1A focus, and they absolutely have a Zone 3 focus. But little to no attention, little to no structure, little to no distinction is created for Zone 1B and Zone 2. As a matter of fact, and I'll share with you, we make this mistake all the time. We're small, we're agile, we can move quickly. We've said that for years. That is one of our strengths, but it's also a weakness. Because when we see something that we think can be better, or if we see something that we think needs to change, if we see a problem, we go to fix it, and we try to fix it all at one time. What that does is it puts a lot of chaos on performance, and so we never really get to that place of effortless, focused performance where our performers are able, again, to just focus on that performance. The biggest difference between companies that sustain performance and those that don't is how strong is the Zone 1B and Zone 2. And that's really the focus of revenue operations. Right, so let's dig into now what revenue operations really is. Let's put some meat on the bones Take it out of being a buzzword, take it out of being a catch-all for it to cover whatever somebody is thinking about at that moment in time, and really get into what role does it play? What is the job of revenue operations? And so if we were to build out a company and we wanted to manage and maximize our performance, we would start by creating a strong go-to-market strategy. Or by the way, forget if we were starting a business, if we were trying to improve the business that we're in, we would look at our go-to-market strategy, we would look at our messaging, and that strategy and messaging is going to drive the overall flow of our system. How do we do what we do? What's the path? What's the overall workflow? What are the tools that we're using? And how are we keeping score? Right? How are we keeping score is oftentimes every bit as important as what we're scoring. Right? Those three things, the design of the system, the tools that we use, and the scoreboard, that is the structure of the organization. And that should be aligned with strategy. The structure is what takes the strategy and begins to bring it to life. It operationalizes it. Realize that the organization is going to follow the structure far more than the strategy. The purpose of the strategy is to give focus so that the trade-offs and the decisions and the actions can be managed effectively in that next stage. Now that structure is going to drive the MO, if you will, the modus operandi, the approach that the company takes. How do you do what you do? How does each person do what they do? Now, we call this playbooks, right? And I want to make one thing very clear. Every company has playbooks. You have a playbook. Whether you realize you have a playbook or not, you have a playbook. A playbook is simply, how do you do what you do? We all have preset ways that we respond to things and that we do things. That is the playbook. Right? The question is the playbook intentional? Is it documented? Is it intentional? Is it objective? Can everyone see what the playbook is? Now, in the vast majority of organizations, it's not. It's invisible. It's what we call the no playbook. The problem there is everybody's got their sense of the playbook. Everyone's got their sense of how things work. The approach might be close, but it's everybody's interpretation of the approach. And when you're small, that's fine. It's not a big deal. Right? There's a limited amount of complexity that has to be managed. The difficulty is the network effect works against you here. Each person you hire exponentializes the complexity that you have to manage. And then suddenly small misalignments, small misinterpretations create giant chasms. And making a change becomes very difficult, no matter how big or small the change is, because there is no one objective way. There is no clear definition of the your company way. And so when you want to change something, you have to go through a very heavy, very time-consuming ritual process of getting everybody to understand what the situation is so they understand what the change will be. And that introduces a tremendous amount of friction. As a matter of fact, the misalignment here is one of the major causes of friction that's dragging down growth, profitability, and so forth. Now, those playbooks, that approach, that should drive your tech stack. Right? Today, technology is not an option. If you're serious about growth, you need at least a reasonable tech stack. But the mistake that too many companies make is they look at technology as the solution. And what ends up happening is the technology drives the system rather than the system driving the technology. As a matter of fact, that's so true that if you say to somebody, tell me about your systems or tell me about your system, they think you're asking about the technology. Right? We've turned tech and system to most people to sound like a synonym, when in fact they're very, very different things. Technology is an accelerator and an enabler. Technology does not give you a capability that you don't have. It unlocks things, it unlocks capabilities that you have, it enables them, and it accelerates them. But realize, again, when you accelerate, you will magnify any misalignments, any chaos and confusion. It is the old phrase, garbage in, garbage out, right? So technology is a wonderful enabler, and it will enable whatever it is you put in front of it. So if you put it into a highly functioning system, it will enable and accelerate function. But if you put it into a dysfunctional situation, it will enable and accelerate dysfunction, right? And so those four core areas then drive and enable and make possible the execution. And from a customer acquisition, customer success perspective, that basically falls into two categories, right? Sales performance, which we're going to call customer success a subset of sales performance. Customer success is the sales side, the one-to-one management, the individual overview. It is a subset of sales. It's not new sales, but it's still sales, right? And content experience. That's the marketing side of the equation. That's content being involved in generating and accelerating and making things happen, right? And so if you take a look at how well, how highly functioning is your organization, where do you need to focus, what's the key area to improve? If you take a look at it from this chart, it'll give you a pretty good diagnostic. What's our strategy? How strong is the strategy? What's our messaging? Is that driving our system design? The tools that we're using and what we're keeping score, are they aligned? Is our approach aligned with that system? Is the system just theoretical and it's not holding up in real life? Is there dysfunction there? How are we utilizing tech? That drives execution, right? That's the backbone of a growth business. Now, the goal is grow, right? The goal is let's get more juice for the squeeze. Let's get more juice for the growth squeeze. How do we do that? Well, we're big fans of what HubSpot introduced to the world a few years ago of the flywheel, right? We love flywheels. We love the flywheel effect. The beautiful thing about flywheels is, they take some energy and they take some work to get them going. But if you structure your flywheel effectively, that flywheel generates momentum. And then if you manage the alignment of that flywheel, you'll be able to generate more and more momentum with less relative effort, right? And that's where you get high velocity growth, right? That's the nirvana for everybody. Now, if we think about what companies do, especially from a sales and marketing perspective, and we say, okay, well, what are the two areas of plays? Like if you play football, you have offensive plays, you have defensive plays. So if we take a look at this from that standpoint, what are the two parts of the game? We'll see that sales and marketing organizations basically only have two teams, two areas to pull strategies and tactics from. The first one, which is the most popular, is increase force. Do more. And think about it for a moment. How much more are you doing today than you did a year ago, let alone 5 years ago, 10 years ago, 15 years ago? I got a friend who just started a business. There's 3 people in the business. They do more stuff from a sales and marketing perspective than companies I know did 10 years ago that had 100 or 200 people. Right? There's so much that we do that's just become standard. We don't even think of it as doing more, but we're doing more and more and more and more and more. Now, here's the problem with increased force. It's necessary, but increasing force has a point of diminishing returns. You get far more benefit from the first more that you do than from the second, typically. And certainly when you get to the point of hitting a critical mass, right? But also, there's only so much you can do, right? If you're not careful, the more you do, it begins to conflict with each other. And also, as you increase force, you also increase friction. That's the second area where we can play. The second way to increase the rate of your flywheel is to reduce the negative friction that's slowing it down, that's dragging it, right? And realize that as we increase force, and by the way, think of this for friction. If you're struggling to go, okay, well, what does friction really mean for you? Friction, it's complexity. Every bit of complexity that you add is friction. And realize, organizations increase in complexity simply for being. Every day you exist, you pick up more complexity. It's the business equivalent of the third law of thermodynamics. Entropy is always increasing. In business, complexity is always increasing. Therefore, friction is always increasing. So if we do nothing, we're generating more friction in our business. So doing nothing creates a drag against our performance. So simply by doing nothing, it means we have to do more. We have to increase the force just to be able to keep the same rate that we're at. That's what I mean by diminishing returns. And we've gotten to the point, I believe, and I think the research supports it, that we've become so sophisticated in how we're using technology and how we're using people and how we're using things that if all we're thinking about is increasing force, it's just not going to get us where we need to go, right? We need to pay far, far more attention to the friction side of the equation. And the reason is we have become obsessed. We've become addicted to speed. We are a speed-based society today. We brag about how much we're doing today. Candidly, it's not healthy. But we forget that speed is merely a measurement of how fast are we going. It doesn't take into account where are we going. So speed is how fast are we going. Velocity is how long does it take us to get there. And what's interesting is very often, if you're going too fast, especially when you're in a complex ecosystem like sales and marketing is, the way to increase velocity is oftentimes to slow it down, is to simplify it. So we have to manage that complexity. We have to manage that friction so that we can translate speed to velocity. And that brings us to the philosophical point of today's conversation, what we call the inverse friction principle. Here's what the inverse friction principle says. The ease or effortlessness of a user's experience has an inverse relationship to the complexity involved in designing the system that makes the experience so easy or effortless. The ease or effortlessness of a salesperson selling has an inverse relationship to the complexity involved in designing the system that makes the experience so easy for the salesperson to sell. The ease or effortlessness a buyer has to buy from you has an inverse relationship, right? Think about Amazon. Think about Uber. They make it so easy. It's so easy to buy something on Amazon. You can't help but think, it's so easy. Why isn't everybody doing it? Until you realize how complex the system is to make the experience so easy. Right, here's the corollary to the inverse friction principle. It's really, really hard to make things really, really easy. Right, and so when we think about what do we have to do to enable our salespeople, to increase sales time, to enable our marketers, to enable our creative, we have to start looking at this thing called friction. And that means we have to think about how the system has been designed. Because realize, your system is perfectly designed to produce the experiences and the outcomes that you're currently experiencing. So if you want to change those experiences sustainably, you've got to change the system that's creating it. And that's what revenue operations is about. That's what RevOps is about. You know, the funny thing about preparing for this session is this next slide was the hardest one for us to do. The next slide, I'm going to actually give you a definition for revenue operations. Now I say it's funny because, revenue operations is such a hot topic today. I figured it was going to be very easy to get a good operational definition for revenue operations. But it wasn't. The vast majority of revenue operations definitions that we saw, candidly, they're filled with buzzwords, or they're technically reasonable, but don't necessarily mean anything. And what I mean by that is you can meet the definition of a lot of the revenue operations definitions that are out there and not generate the result that you're looking for. And you can generate the result that you're looking for without meeting that definition. So it becomes not a very operational definition. It doesn't really mean anything. So we had to dig deep and really work to define, okay, is there truly an operational definition for revenue operations? And by the way, if there's not, then we can't call it a single discipline. And there is. My bet is, I share this for full disclosure, this is a relatively new definition, which means 6 months from now, our definition will probably be slightly different, because what we find is when we're working on terms like this, our definitions get tighter over time as they go through more experience and more iterations. But this is a good working definition for revenue operations. Revenue operations is the strategic coordination, keyword strategic, of all market-facing, revenue-oriented systems, processes, and activities designed to increase velocity, optimize throughput, and reduce the effort required to solve for the customer and achieve revenue objectives. So the keyword in revenue operations is revenue, right? So revenue has a distinct role in the definition. The customer has a distinct role in the definition. You see, revenue operations is about managing the trade-off decisions and the friction between company and customer, but then also internally between company and performers, and within the performers within them. We live in a very, very complex world today, and it presents lots and lots and lots of trade-offs and lots of areas of friction, right? And where is the point of diminishing return? Well, the point of diminishing return is how much are we increasing throughput, and are we achieving our revenue objectives, right? So, it's a lifelong pursuit to eliminate friction. And as your business grows and as it gets more complex, and remember, every day your business gets more complex. So, friction is an ongoing battle that has to be managed. Now, the challenge here is that when revenue operations does its job well, you kind of begin to think you don't need revenue operations because, well, two things. A, revenue operations addresses the invisible. More on that in a little bit. But also, when sales organizations, marketing organizations, senior teams, whatever, when we do strategic retreats, when we talk about sales processes, when we envision campaigns, everything is so clean and clear, right? So in the moment, unless you do the things that we're talking about today, it's really easy to underestimate the complexity and the friction that's involved. And this is true for two reasons. One, when we're talking about it in a perfect environment. We're in a laboratory. And two, everything is intentional and purposeful. It's all very, very clear. But then the whirlwind hits. Then the day job hits. Then the 17 conflicting activities pop up. Then the customer does something that wasn't expected. Then someone calls in sick. Then a typo was found. Then a customer asked a question we weren't prepared for. And all kinds of teeny things are happening in the whirlwind of 100 other things that are happening. And these bits and pieces of time that individually are almost unnoticeable, they build and create significant drag. As we work to increase our speed, small misalignments become huge. You see, 10, 15 years ago, we operated at a slower rate overall. So we could manage some of these misalignments. But now, as we've increased specialization, as we're using more technology, as customer demands have increased, as distinctions between competitors have gotten more nuanced, and so we're increasing volumes, small misalignments become big. And every day that complexity grows. And that complexity is like a barnacle on the hull of a boat. Individually, it's meaningless. But they build, and it goes from being meaningless to problem to death. Right? It will sink the boat. It will sink the ship if it's not managed. And that's what's happening in businesses today, every day. Businesses are paying an unnecessary friction tax. Our research shows that good organizations are paying a 15 to 35% friction tax. That's the opportunity for revenue operations. Average businesses, they're paying a 30 to 60% friction tax. We see sales organizations that are producing half of the results they should be, based on their investments, based on their efforts, based on the activity, based on the size of the team. But it's not necessarily the salesperson's fault. There's just too much friction. And so they're only getting 50% of the juice for the squeeze. Right? In really, really good times, we can afford the friction tax because, we're picking up land, if you will. But today, and I think going into the future, this is going to become deadly because, again, it's smaller and smaller distinctions, smaller and smaller differences that are leading to the key distinctions between competitors and who the winners and losers in different markets are going to be. You see, revenue operations is all about the embodiment of one of my favorite quotes from Omar Bradley. Amateurs talk strategy, professionals talk logistics. Revenue operations is managing the logistics. And I hate to say this because I'm an idea guy personally. But all success comes down to logistics. You see, the do more playbook, it's necessary, but it's not enough. Right? 10, 15, 20 years ago, you could build an advantage because of the content you were creating, or the technology you were using, or the people that you had. But today, everybody's got it. Everybody's got good people, good content, good technology. The difference is the engine. How strong is the engine enabling all of these things? And how good is the plumbing enabling that engine to get the fuel to the right place at the right time in the right way to transfer energy to power? Right? There's a chasm from strategy to execution. And that's the focus of revenue operations. Right? The challenge here is that these three things, relatively speaking, they're invisible. Maybe you're going to make the argument that tech's not invisible. We see it every day. I make the argument that the way we use it, it's more, tech to salespeople and marketers is like water to a fish. It's so prevalent that we don't see it, right? Because we're managing tech for today. And what we have to understand is if we want to empower our strategy so that execution aligns and drives and succeeds, we have to understand you can't solve upstream problems downstream. The job of revenue operations is to solve as much of the problem, to eliminate as much of the negative friction as possible before it gets to execution so that we can execute in low friction environments. That's what enables growth. Revenue operations is a core Horizon 2 discipline. If you're not thinking Horizon 2, then you're not really aligned to build a strong revenue operations function. Now, we've identified 7 key disciplines for revenue operations. Right. The top 4 are more of the operational disciplines. This is what a revenue operations team is doing on a day-to-day, a week-to-week basis. And the bottom 3 are more around the structural area, and they're more around the, like I said earlier, building the track, creating the environment for performance. Right? So the top 4 are system design. So what is the system that we're using? What are the playbooks? What are the processes? Optimizing that for performance, customer experience, user experience, and utilization. Are we using the systems the way we should be using them? Data is crucial, and data is a key component to revenue operations. So revenue operations manages database, maintains it, ensures data integrity, and is optimizing. Ensuring that our core tech stack is aligned, the CRM and marketing automation is set up and aligned and working. Those are the systems our teams are working in on a day-to-day basis, on a minute-to-minute basis. They're fraught with friction. They're fraught with small conflicts. And then overall, from the perspective of the tech stack, designing the overall tech stack, aligning it, and optimizing. Are we utilizing technology? Here's a key note, and I see far too many organizations that violate this rule. If you're not getting more juice for the squeeze from your technology, then you should get rid of the technology. And there are too many times where I'm seeing companies that are using technology, therefore increasing their costs, increasing their complexity, which creates even more cost. But it's not making anything easier. As a matter of fact, a lot of times it's making things harder. Now, a lot of times that's not the technology's fault. A lot of times that's the system that the technology is being used in, the processes that have been set up, the customer experience. Right? But I've seen a lot of companies that use CRMs that candidly, they'd be better off, from a revenue and customer experience standpoint if they didn't. Because, frankly, the CRM becomes a burden. Now, I'll also tell you that if you're serious about growth, you need to be using a CRM. Right? But you need to be using it correctly. And the same thing is about any piece of technology that you're using. And so revenue operations does the job reviews, if you will, of the entire tech stack. That's the operational components of revenue operations, the structural components, territory management. That could be traditional territories. It could be how assignment, specialization, also compensation. A couple key points here. Compensation is not a motivator. It's a very, very misunderstood point here. And I know what I just said is probably very controversial, but compensation is not a motivator. What compensation is it's a signal. It's the clearest and one of the most powerful signals that a company gives its people. Right? Here's what I mean by this. You never want to use compensation as a replacement for good process or good management. And that's the biggest compensation mistake made with salespeople is we try to design our compensation system to incentivize people to do certain things. I hear it all the time as I work with companies on compensation structures and compensation systems. Well, we're trying to get our salespeople to dig deeper into the process, and so we want to design an incentive program that will support the X, Y, or Z. And it's like, whoa, stop. Compensation is not going to do that. That's going to be done by good process management, and good management. Right? What compensation says is, what do you care about? Right? So the way you structure your compensation system is the signal that tells somebody, is what you're saying real? Right? So compensation is crucially important, but realize there's very little upside that you get from compensation. Like, success with compensation is it aligns with the strategy and the structure. What happens too often is that it conflicts. And if compensation conflicts, it creates a loss. Right? So make sure that you're utilizing compensation the way compensation needs to be utilized. By the way, that and everything in the 4 operational areas is why this next piece is a key part of revenue operations. And that's behavioral science and design. And I'll tell you that I think the sales and marketing world, it blows me away. We do not spend anywhere near enough time focused on the area of behavioral science. As a matter of fact, we're dismissive of it as an industry, right? We view it as, soft social science or pure theory or whatever. But it's fascinating to me because sales and marketing is all about impacting behavior. That's what we're trying to do in sales and marketing. We're trying to influence behavior. Yet very few organizations put forth the effort to understand, why do people do what they do? How do people do what they do? So that they can make sure that the things that they're doing actually align with how humans behave. And then further, to confirm that we're getting the behavior that we want, that we're testing those interventions and things along those lines. Right? It's a key component to making any of these systems work. And then the last area is around data science. Setting up the structure and the system so that the right data, the right metrics, the right analytics get to the right people at the right time in the right way. We have jumped the shark on data and metrics. We have jumped the shark on analytics. We have forgotten that metrics and analytics bring a lot of noise. What we're looking for is the signal that creates the insight. And what we're doing is we're filling our people up with lots and lots of noise, and we're making dumber decisions for it. Revenue operations curates data, analytics, and metrics so that all that data that we have serves the function that we want to have for it. Right. That's what revenue operations is about. Now, different size organizations, different complexity organizations are going to have different needs. And I'm not suggesting that all 7 of these needs exist in equal weighting in companies of all sizes and all types. Right? It's very possible, especially from the strategy and structural levels, that certainly at the smaller or earlier stage of a business career, that's something that you might use outside providers for. You don't need to necessarily have it 24/7, 365. Right? That's the strategic part of revenue operations. But if you're not managing, if someone doesn't have responsibility for managing the optimization, alignment, and utilization of your tools and systems on an ongoing basis, if someone's not responsible for managing and mitigating complexity and friction, you're going to find every day you got to run harder just to stay in place. That's what revenue operations is. That's the job that it does. That's the key to effective revenue operations. Now let's talk about what's the key to launching a revenue operations capability and integrating a revenue operations capability in your company. Now I'll tell you, here's the first question that we started asking when we were getting deep in RevOps. And the first thing was is RevOps a thing? I'll share with you 2 years ago, when we started getting very serious about this area, we called it sales operations. And then we saw that there was marketing operations. And then we started seeing people call it revenue operations. And at first blush, my thinking was, okay, well, revenue operations is just a term to cover sales and marketing operations so that it's discipline neutral, if you will. Right? And so, that's the first question. Is there a difference between sales and or marketing operations and revenue operations? A lot of the thinking out there, the way it's being talked about, there's no difference. As a matter of fact, the number of times I've seen somebody say, oh, you've got sales operations and marketing operations. Well, what you need to do is make it revenue operations because it'll cover, it'll be full cycle. Yeah, that's not true. If all we do is change the name of our departments to revenue operations, even if sales operations reports to sales and marketing operations reports to marketing, and we say, okay, we're calling it revenue operations, that's now one team, it's not actually going to change anything. And if that's the case, then, frankly, there's no need for this webinar. Don't worry, you haven't wasted your time. We wouldn't be doing this webinar if that was the conclusion we came to. This is going to be another, possibly controversial take here. So I'm not saying that this is what the industry says it is. This is what our experience says it is. Because, by the way, you can call it whatever you want to call it. What we're focused on is, if you want sustainable performance, if you want to get more juice for the squeeze on a sustainable basis, what we're asking is, how do you have to structure yourself? How do you have to run the business so that you can do that? I don't care what you call it, right? So it's not about the name of it. It's about what's the discipline, what's the day-to-day, what's the operational structure? Is there a difference? And we believe unquestionably there is a difference between the approach to sales/marketing operations and what the approach to revenue operations should be. And that is, sales or marketing operations is very, very task focused. Its focus is on efficiency. Revenue operations is outcomes focused. Right. And that means revenue operations is not just a simple decision. RevOps is strategic. And that means it needs to have a clear diagnosis of the problem that it's solving, a clear policy that creates direction and constraints on the actions that should be taken so that a set of coherent actions can be taken. And that means if you don't have a strong framework to guide what you're doing, then you can't have a revenue operations function. And you'll be flying blind. Right? This is one of the things that's missing is not very many companies have a clear framework in place. Now, we created the deals framework about 6 months ago. We launched it. We think it's a very, very strong framework. You can check it out on the website, imaginellc.com/deals-framework. We think candidly, it simplifies a lot of the craziness that's out there about different methodologies and things like that. But I'm not saying you have to follow the deals framework. I mean, you'd be wise to, but you don't have to. You do need to have a clear framework that's guiding your actions. And by the way, if you don't have a clear framework, you can't have alignment. Now, with that framework, here are the 7 keys to make RevOps successful. The first is understand the difference between complex and complicated. You see, sales and marketing operations, they exist to manage things that are complicated. They solve the complicated. Complicated means it's hard to do. Complex means it's interconnected. Right? And so like the biggest challenge in business the biggest challenge in a complex system is to improve something, you almost by definition, you have to isolate it. But the moment you isolate it, you're no longer in a real environment. So when you change the thing that you're fixing, you have to understand that change impacts other things that then also impact the thing that you changed. Right? And so there is no such thing as solving the complex. You manage complexity. Right? And that's why friction is always increasing. Every decision adds some friction here, takes some friction there. But by the way, friction can be a good thing. Friction can set a path. Right? Friction can make it easier to take one action than another action. Hey, I want my people to do this and not this. Humans are path of least resistance creatures. So we can incentivize people to do things. We can talk about it. Those are promoting components. Or we can make it a little bit harder. We can make it harder to do the thing that we don't want them to do. We can add some friction to what we don't want them to do and take away the friction for the things that we do want them to do. And if you don't understand the difference between complex and complicated, it's very likely you're going to take the wrong action to drive the behavior that you're looking to drive. Map your complete acquisition and success process. Do that first. Have a clear map that you're regularly updating. It starts off as theory and then it becomes reality. Mapping that out so there's a clear, single source, single objective. This is our way. Right. That's where you get optimization. That's where opportunities for optimization come from. Because then you identify what are those crucial waypoints. In manufacturing, we would call those where are the key constraint points. You see, manufacturers learned 4 decades ago that it was far more about managing constraints. That efficiency was great, but too much of the efficiency that we're creating doesn't actually solve for anything. It doesn't increase throughput. Right? And this is true in most sales and marketing organizations. It's only about 15 to 30% of the things that we do that are truly key inflection points, that have real delta to them. Those are the areas we want to focus on. Those are the key waypoints. That's where we want to manage force and friction to make it as easy and effortless to get to those key inflection points as predictably as possible. With that, you're then able to document your playbooks. Define what is the way. Then Operationalize the playbooks. Those playbooks should be built into your technology. They should drive what your technology does. Your technology is the number one tool to reduce the friction for how you want it to be done and increase the friction for how you don't want it to be done. Playbooks operationalize technology. Establish a cross-functional friction review team. Executive, sales, marketing, success, operations, finance. All those disciplines need to be present because we're solving for the company. Now, if you're big enough, we recommend that you call that your revenue operations team. But maybe you're not big enough to justify a full-scale revenue operations team. Right? That's fine. But you need to be looking at it through that cross-function. You're solving for the whole, not for one individual piece of the business. And the last piece, which in many ways is the most important, because if you do all of this, but you forget this last one, you probably don't get the outcome that you're looking for. And that's give RevOps the accountability, hold them accountable, and give them the authority needed to make this happen. And that means you cannot subordinate revenue operations to sales or marketing. Right? If you have revenue operations as a subset of sales or marketing, then it is de facto a sales or marketing operations function, and it's going to become task focused solely on efficiency. Right? Revenue operations is a strategic function to manage the trade-offs, to manage the complexity. And that means it needs to have the authority to be able to do that. Now, that doesn't mean that sales and marketing is subordinate to revenue operations, because if you do that, you'll create a highly efficient organization that doesn't produce a whole lot. Right? These are difficult, complex situations that have no right or wrong answers. They have trade-offs. They all have advantages and disadvantages, and they need to be viewed from those different perspectives. RevOps is truly the third discipline: sales, marketing, and revenue operations. You see, revenue operations makes it possible to track and utilize metrics effectively to bring the holy grail of identifying outcomes. How do we target key outcomes that make revenue growth and revenue retention predictable? That's the role, that's the job of revenue operations. If you're interested in learning more, we encourage you to take advantage of the RevOps Advantage Jumpstart. Right? Revenue operations can increase the impact and ROI of your sales and marketing efforts by 15 to 35%. By the way, if you'd like, we've created a calculator so you can see what is friction costing you. What's the impact opportunity of revenue operations? Now, the Jumpstart, we've waived the fee for anybody that watches this webinar. Typically, it's a $3,500 quick start process that takes a look at what you're doing, how you're doing it, identifies some of the key areas for where and how RevOps can work. It will also identify where are the key areas of friction that have, the biggest juice for the squeeze opportunities. So if you'd like to learn more about how to implement RevOps in your organization, or you want to learn a little bit more about the Jumpstart, reach out to us, let us know. And I also, to finish it off, just want to encourage you to join the Sales Genius Network. This is a free community. We are rolling out new courses, new programs, new resources. Increasingly, we're putting content like this into the Sales Genius Network and not just out in general. We also have some plans to begin to develop some sharing opportunities and things like that so we can all help each other get better. That is our show for today. Check us out on imaginellc.com. Give me a shout out on Twitter at Doug Davidoff. If you have any questions, hit me up on Twitter, send me an email. We're happy to help you out. Until next time, go out and grow.